Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performance of the week that was, and of course, our hottest stock picks for the week to come. Before I go any further, please allow me to introduce my investment panel, resident experts in the market. To my left, the ever wonderful Miss Caroline Wong. Is there a doctor in the house? Now, Doctor of Maths himself, Dr. Adam Shedakowski, and of course, the ever mystic Mr. Louis Mossman. Ladies and gents, welcome from our second week of lockdown here in Sydney, and it looks like it's going to get extended for another week, and then potentially on after that. Less than ideal.
Yes, well, we've had a bit of a rocky week as well in the market, so maybe investors are also respecting the economic impacts of these lockdowns on the market, which of course initially wasn't recognised. We saw an update the first day that.
Well, yes, I think everyone got. Certainly, I noticed myself as a person that was sitting on the trading department. Everybody got sent home from work. My phone went crazy as people got home, checking their accounts, calling in, just feeling like they were getting a bit bored at home, wanting a bit of a chat. I am seeing that now. I've got a gentleman who just wanted me to take him through every single stock in his portfolio, and he'd already had his end of financial results, but he just wanted to have a look at everything, and I felt like, mate, are you just sitting at home wanting someone to chat to right now?
Probably.
Yeah.
Probably. Well, yeah, I think the market was very soft today and soft all week. We ended about 0.5% down, and today was not a bloodbath, but obviously just a negative lead from the US, where all four major indices over there were also in the red.
We needed it, though. To be fair with you, in all seriousness, nothing can just go up forever. I was anticipating it. I thought it would have happened a couple of days ago because we've had such a good day. Like, we were up nearly 1%. We'll call it 1% the day before. Today we were down like 1.4, maybe 1.3. Nothing was catastrophic. It's not like we saw any triple-digit declines. Not that we'd see that, but any double-digit declines too much. It was mostly just sort of broad-based weakness, would we say?
Yeah, I suppose when you're an all-time highs, having a down day is almost just as good as an up day. It's just natural to have that, and I think the market's probably always looking for an excuse to ease off. As in the papers you saw this morning, big sell-off in the US. It's all plastered over across the headlines. Adam was mentioning that to me, and at the end of the day, it's just a down day in the market. It's nothing to be too played into. Very good.
Let's have a chat about what's really causing that, because it all comes down to treasury yields, a lot of stuff around that. Over in the US. I'm going to go to Caroline Wong. Have a quick chat to us about what that is.
So US Treasury yields actually fell about 10% this week. It's down to 1.3%. So yields are actually based off expectations on inflation as well as economic growth. So what have we seen this week? We saw the Delta variant, so that does not bode well for economic growth.
That's COVID, yeah.
Yes, we also saw the release of the Federal Reserve open market meeting minutes. They did talk about tapering, but they did not explicitly say when they will begin doing so. So inflation expectations were dampened.
It's really interesting. Sorry to interject, but it's quite interesting, quite funny. The moment that our own government comes out and says, yeah, we're looking at thinking about tapering it back and stuff, maybe thinking, and then as soon as the US comes out saying, yeah, we're going to start thinking about talking about it, suddenly everything just spikes back up and everyone's like, oh, no, none of that, let's go back, and everything kind of comes back out again. It feels like that in some ways, but continue, yep.
Yeah, so collectively, these 2 points weigh on the treasury yields. So what does low treasury yields mean? It means that money is flowing into bond markets and out of stock market, but that is not exactly bad for us. If we pull up the chart, you can see the performance of the NASDAQ as well as the Dow between January to May. What you can see very, very clearly is that the white line, which represents the Nasdaq, that contains growth players as well as tech stocks. So these are generally better beneficiaries of falling bond yields. And this is as opposed to the Dow, which you can see that the performance isn't doing too well, and that contains players like your bank stocks or your value players. So in times of low bond yields, you can see that tech stocks usually fare better than value stocks.
So you think, to go back to a question that we had last week, on the video question, do we think growth or don't, you'd be saying based on this recent evidence, you'd be probably changing your mind to growth as a potential.
Yeah, and it also points to what we said last week, like probably better to do a little bit of both, because these movements are just very susceptible to broader economic movements, and you just can't predict when they will coming and to what extent.
Yeah. Of course, there's one other thing I'd like to add. When we see these big movements in treasury yields, people just point to it as the main driver behind everything that's happened in the market this week. So, we've had a fall in treasury yields and the market goes down, and they attribute it to that. I mean, a few months ago, we're having stronger treasury yields and the market pullback was attributed to those stronger treasury yields. Exactly. Obviously, there was the value versus tech, and Caroline explained the relationship there very well, but you can just goes to show what people really grab onto.
The old saying,
when something happens, they'll just attribute it straight to that.
Price to perfection, and of course, any excuse for a sell-off is seeming to be people grasping at, and quite rightly so. When we're up as high as we are, any excuse for a sell-off. Dr. Adam Shedakovsky, let's go to the medical pandemic that's sweeping probably a little bit outside your doctorate, but why not? We'll see if we can loop that in there. Have a chat to us about what's sort of happening with our own COVID here and what the implications are in terms of that.
Absolutely, yeah. So we did have some new numbers. So the highest number of new cases, actually 44 on the last 24 hours.
And that was the beat of yesterday, which is the highest number again, 38.
Yeah, exactly.
So we've beat the highest number consecutively.
So New South Wales definitely is considering something serious, and today something is happening. So that is starting 5 p.m. So 5 p.m. today, additional restrictions. So globally, like in region New South Wales, there are not too many changes, but in Greater Sydney, there is quite a bit of changes. So let me just outline some of the changes. So for example, when you go out, the maximum size of the group is now 2. Funeral, for example.
So you can only walk down the road with 2 people.
Yeah, yeah. Okay. So that is a big restriction. Another big change is...
That's still a lot more than I tend to walk down the road with.
Yeah. Well, I'm sure it
all right, everyone's laughing.
Depends,
very
right?
funny, yeah.
So another big change I would say is when you go shopping, at most 1 person per household.
Yes.
So yeah, you can.
Yeah, they said I listened to Gladys, and she said don't browse. She said no browsing.
No
plan
browsing.
your shopping.
Yeah.
Plan your shopping now.
It's a very specific.
Yeah. Don't browse anymore. Just go straight there and shopping. Well, I have a list, so when I go shopping, I normally I'm like, well, tick.
Yeah. So exercising also being limited. You have to be close to home as you're exercising.
10Ks, yeah.
Exactly. You are well on the news there. And then finally something with schools. So for everyone, school is starting on Tuesday on the 12th, but in Greater Sydney, there is a lockdown restriction, so there will be having online teaching for longer time.
Kids being kept at home.
Yeah, kids are being kept at home until July 19th, where the lockdown is being extended 1 week, so ending Friday next week.
We're going to go to a 16th, Friday the 16th, and then they're anticipating a further extension after that.
Yeah, most likely. So at this point, it's not being announced, but we will have to see what's happening. I would also add a little bit more of a bigger picture here. So, of course, we are worried about what is happening in Australia, but there is a lot of things happening outside of Australia as well in respect to COVID and Delta variant. So let me just give a couple of examples. So, for example, in South Korea, the capital city, they are introducing the most strict restrictions ever. From the beginning of the pandemic, so from Monday for the next 2 weeks.
Keeping in mind the beginning of the pandemic, we were seeing videos of people in China getting nailed into their bedrooms and into their homes.
Yeah, so very serious. Another example is Japan, for example. So they have like 1,000 daily cases at the moment. So they have now declared emergency in Tokyo throughout the entire Olympics, so all the way to August. So there will be no spectaculars and empty scenes. So unfortunately, that's the decision they had to make.
Train for 5 years to go to the Olympics, and then suddenly you don't even get
celebrate in front of anybody.
Yeah, and then there is the other thing. in UK, what they're being announcing, they're still holding very firm that they want to relax restriction in UK on July 19th and let people decide.
And we're 50% vaccinated over there, though.
Yeah, I mean, more than 50.
We're here, we're on 9% vaccinated.
Yeah.
So. Listen, I will say one thing controversial. Let me first caveat this by saying that I genuinely think in a time like this, it's important that we all just pull together and be exceptionally patient. I'm fortunate enough in my circumstances that I can walk around a lot, and I'm very, very grateful about that. But one of the big things I am very well aware of, I'm not saying it's good or bad, we have just come out of a 2-week lockdown, and if anything, we've gotten worse. What's to say that the next 2 weeks is actually going to do anything different?
Well, I mean, there is a little bit of a change in business sentiment, so that is something to take into account. So I'm not sure exactly how that will move business forwards, moving if we're talking about 1 year ahead and so on. I don't think that will.
But I mean, Mr. Mossman, going back to what I was sort of saying there before, what do you think is going to be different for this next week, next 2 weeks? Do you think that these tightening restrictions are going to have an effect, or what do you think is going to be the...
Well, I think we're definitely just going to take it back to what we're here to talk about, which is the market. Yeah. Okay? Now, the impact on the market, I think, will be minimal. We've proven one time around, and so have equity markets around the world, that they're not too worried about pandemic and the impact. If there is direct impacts on companies, revenues and revenue streams, yes, that might be reflected, but in the broader index, you might see a little bit of softness like we've seen this week, but I think the general trend is quite positive. And if you look long term, which is what investors are looking at right now, with the PEs we're seeing at the moment, I think long term nothing's going to exceptionally
Well, listen,
change.
I think we've got a fantastic show lined up for the rest of it, because we're going to talk about some stuff that's really undervalued. I do think that anyone that's sitting at home that might be in a little lockdown, if you want to tune into the podcast and hear about some of the picks we've got today, it's going to be fantastic, because I know you guys have got some great stuff up your sleeves. We're going to have a big chat about gold, commodities, might even throw some Bitcoin in there and sort of have a bit of a chat with that. We're going to be back shortly. Ladies and gentlemen, we are going to take a short break. If you have any questions for our panel, please feel free to take a video and email it through to info@kosec.com.au. Everyone who does will receive a copy of our book, Stock Market Success, retailing in Dymocks for $39.95, or our magazine, selling in news agencies Australia-wide for $19.95. In the meantime, like, subscribe, and hit that bell, and we'll be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age, and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
Welcome back. Let's talk about currencies and commodities, all things that shine, sparkle, fold, and make the world go round. Mr. Louis Mossman, let's go straight over to yourself. Talk us story about these two topical information here at the moment. Let's go gold, Bitcoin, how we're sort of going in that sort of space right now.
Well, I think very quiet for both of those markets, both gold.
Good. Adam.
About gold and Bitcoin. Gold has had a very rough time of things, about month to date. However, yes, for the last week, it's looked pretty good. So for the last month, we've had a lot of news coming around that central banks might be starting continually to buy gold. It is said that about 1 in 5 central banks are looking to increase their reserves of the commodity. HSBC, a major investment bank out of Asia, takes the position that if a central bank is looking to diversify into gold, it is the best way to take it out of US dollars rather than go into an alternative currency. So they're backing that idea, as gold is both an inflation hedge and a hedge against just most markets, I believe, over the next, say, 6 to 12 months.
So they're sort of a little bit nervous, looking to start acquiring a little bit of gold. So potentially that's not a bad place to be.
Exactly right. And I just will mention the 3 central banks this week, the ECB, the Federal Reserve, and the RBA didn't do much to really move gold prices at all. Quickly, we had the RBA meet on Tuesday, of course, and announce the beginning of their tapering, which is, of course, the trigger word in the markets right now. So they've reduced the asset purchase program from $5 to $4 billion a week, which is almost in line with expectations. The only thing that was hurt by that was the Australian dollar, which fell slightly following the days following. Initially, it was up, but fell following. In the US, we had Federal Reserve meeting minutes, didn't move the market at all. And then the ECB as well has actually changed the wording of their inflation target. So previously, they wanted inflation below 2%. Obviously, out of the Weimar Republic and Germany's hyperinflation, they get very scared in Europe about it. But at the moment, they're more than happy to let it hit and maybe run even above 2%. All of that didn't impact gold at all.
That was the first time in 20 years.
First time in 20 years that they've had an adjustment to policy. Very right. And it's, I think, something that central banks are very much playing with right now. The wording, we've seen talking in the US, and now we're seeing the adjustments of the wording in Europe.
It's interesting the way that the world's sort of going now. Everybody's really just hanging on every single word that it kind of says.
Yeah.
Now it's gone from not, oh, you're going to raise rates or lower rates. I mean, back in 2017, it was, are you going to raise rates or not raise rates? You know, what's going to happen? Are they going to raise, lower, keep them on hold?
Exactly.
Now it's just progressed to, let's analyze every single little iota of a word that they ever say about anything.
Yep.
How many thinking about is there? And is it more bullish or less bullish? Did they do 5 this time and 4 last time? What's sort of looking at it this one? And it's getting everyone quite sort of anxious, I think, about what's going on.
What everyone's focusing on, because they know that they're not going to increase interest rates, or else they're very, very confident.
Yeah.
So then they look at the asset purchases plans and they're like, well, they're probably not going to change them anytime soon. So then they look to the wording of the Federal Reserve meeting minutes. So they're going into every detail. But that's just about all from the central banks. I'll quickly hit on Bitcoin and cryptocurrency markets, which have been very muted. I've been talking about Bitcoin consolidating, in my
It's interesting you say muted because it was up and down 3%, 4% this week.
Muted
but for that, it's very muted, isn't
exactly
it? Like
right.
That is actually, and very range bound, very muted. Like we haven't seen it really go anywhere. It's trading in that beautiful range between 32 and 40 US, and that's sort of where we're situated.
Yeah, and at the position that I've held all this, say, for the last fortnight, is the longer that Bitcoin and cryptocurrency markets can consolidate where they currently are, the better it is for the long-term prospects. It's finding a lot of support, not at a particular level, but in a range, support-bound range. And of course, I was thinking that it could test 25 and then 20, but again, it's
the longer it stays in there, the less likely that is to come to fruition.
Exactly. And one final thing about Bitcoin, the UFC have actually signed a deal with an exchange called Crypto.com.
For those people that aren't aware, that is the Ultimate Fighting Championship,
Exactly.
which is the bigger one run by Dana White, Conor McGregor fighting this weekend. They are now, is it going to be happening this weekend? They're putting...
I'm not sure when the agreement is finalised and begins. I don't think it'll be this weekend. That seems far too quick. They would have been promoting it.
It's very interesting if you take a look at that just from a psychology point of view. I mean, what does the tennis, what does the Wimbledon have advertised? Rolex, right? Because that's the type of people that are watching, people that can afford a Rolex. The people that are watching the UFC fighters, I mean, this is cage fighting. They are obviously, it's very tactful. They are doing, these are the guys that are like, yeah, I'll put $1,000 into some specky crypto and just see what happens. So it's Coinbase, CoinSpot.
No, Crypto.com. So they're one of the largest exchanges, not the largest, but it's a $175 million 10-year deal. Yeah. So very interesting.
And I know Ada or Cardona was actually advertising the AFL a week ago or something along those lines.
So we're definitely seeing cryptocurrency markets both expand and these exchanges really looking to promote themselves. So just a few interesting points there on Bitcoin and gold.
Very good. Well, let's go over to Dr. Adam. Have a quick chat to us about oil, which is, of course, the counterpart, because I know that has been having an exceptional week, hasn't it?
Yes, indeed. It's quite volatile. So usually some of the other weeks we have seen oil was steadily going up and up and up and up. And that has been happening for quite some time. And then we were having this meeting, supposed to be a meeting that was like projecting 500,000 new barrels per day.
Where was the meeting meant to be taking place? It was a Zoom conference, wasn't it?
Virtual OPEC.
Virtual.
Yeah, so virtual conference. So the expectation was 500,000.
And that didn't happen.
Wow. So, lots happened. So the thing was like Saudi Arabia, there was like saying, oh, let's postpone because there was some tension, and then the tension started just growing and growing.
Couldn't get the Zoom button working.
So, basically the really problem is that UAE, they don't want the deal unless they get something.
Yeah, that's right.
And what they really want, they want to be allowed to increase their baseline. So that's just meaning they're allowed to produce more according to the rules that they have now. And the other countries are not okay with that. And that is just a deadlock.
Because of course it all comes down to how profitable you are. If you can rip oil out of the ground and that you can sell, and it costs you $6 to do that, and you can sell it for $30 a barrel, then you're happy, especially at $70. The problem is there's a lot of miners that maybe can't produce it at such a low rate, so they want to curb it and they want the oil price to go high. Is that the general consensus there from just a base level?
Absolutely. Yeah. So another interesting thing to add though is how the market is responding to this, because it's really chaotic. Because it can really go two ways. Either like what will just happen is there is no deal, so there will just be no more oil put on market, and the expectation were, of course, there would be. So what does that mean? Less oil, price go up.
Yes.
But then there is the completely other scenario, like they're saying no deal. Well, that will simply mean that everything will fall apart.
Yeah, right.
Maybe OPEC will fall apart altogether.
And then you get this non-compliance, they call it non-compliance of everything.
Yeah, exactly. So people will just do whatever, or the countries will do whatever they feel like. Maybe they will just start flooding the market. At this point, they're firmly saying, no, we will still follow the current agreement, but who knows? Yes. So and there was some expectations of maybe that this will actually go the other way, and there will be really some kind of split. So we had a day where oil fell 2.7%, 2.6%, so in just one day, and that was pretty significant. So we certainly had a dip after the deal didn't come to anything at all. The dip was about 5%.
Yeah, right.
Just in 2 days.
So
very, very significant. But in the big picture, we do know that
strong upward
trend. There is a demand. So let me just show you a photo of the demand of U.S. crude oil. So that is the stock. U.S. stock inventory. It has just been going down and down and down. So we do know that there is and I mean, there is a demand. So despite all the fear that has been happening on Monday and Tuesday because there was no deal, we have seen again that the price has been going up. Again, kind of recouping a couple of percent. So overall for the week, we are down like roughly 2.5% for both West Texas and for the Brent.
Very good. All right, Caroline Wong, improve this section of the show by telling us
improve?
by telling us a little bit about iron ore and maybe with the AUD. Chuck it in there a little bit.
Sure. So iron ore was relatively flat this week. As of Monday, it was trading about $217 a ton. As of Friday morning, today it was $218 a ton. So basically, it did nothing.
218, unbelievable. Really solidifying itself above that 200 handle, isn't it?
Yeah. But an interesting feature that I saw this week was that because of this elevated prices iron ore is experiencing, China is looking towards replacing iron ore with recycled steel.
Oh, cheapest. Okay, I don't know how I'd feel about getting a bridge built out of recycled steel, but yep.
But if we look at our picture, it actually shows the imports of iron ore itself as well as recycled steel. So that's between January to May 2021. You can see that the orange line represents that of iron ore, and that actually is falling towards the second quarter of the year. And then for recycled steel, you can see that it's gradually making an upward trajectory. What this says is that for May itself, imports of recycled steel came in to 120,000 tons, but then imports of iron ore came in at 90 million tons. So what this shows is that the uptick in imports of recycled iron ore, it's still very, very far away from iron ore itself. So even though it's gradually moving towards higher, but then there's still a lot of catch up to do.
Yes.
And it actually supports the narrative that iron ore is actually too big to fail. So we usually hear too big to fail in financial institutions, but then now it's actually flowing through to iron ore. Iron ore is actually too big to fail. But for this week, Credit Suisse has actually upgraded its forecast for iron ore. It previously gave iron ore $149 a ton for this year. It actually moved it to $179 a ton. So
still down about $40 odd from where it is right now. Anyway, very, very good. We are out of time for this section. Ladies and gentlemen, that's commodities and currencies in the events that have shaped them. Now, are you a bull or bear? Let us know. Our phone lines are now open. But for now, like, subscribe, and hit that bell. We're going to take a short break. And when we get back, we're going to have a look at what the best and worst performers in Australia were this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Welcome back. Let's move on to our next section now and have a look at what the best and worst performers for the week were. Were there tears shed this week? Who lost money? And who has Christmas come early for? Caroline, our queen of charts, why don't you bring up our chart about what's happened this week? Give us a bit of an insight into how things have been progressing for people.
Sure. So if we look at our chart, we can see that there are more greens than red. But of course, this was performance up to Thursday only. It does not include performance today. So our top performing sector was industrials, up 4.5%. And a lot of this was done right at the start of the week. Sydney Airport received a takeover offer where it surged 33% after IFM investors offered to take over them. So that's at $8.25 a share. It's about 40% premium as opposed to their Friday's close. Second top performing sector was consumer staples, up 1.5%. A2 Milk was the star performer. Probably time it
needed that, did it not? It's been a while since I've heard that in someone's minds. Wow, so that's now what, above $8 now?
Yeah, close to that. So it was up close to 10% this week after it was given a green light by regulators. What's proposed 75% acquisition of this New Zealand Matua Valley Milk Company. And the worst performing sector this week was healthcare, down close to 1%. So heavyweight CSL was down about 3%. But more importantly, I'd like to talk about Nanosonics. So the infection prevention player was actually downgraded by Goldman Sachs to a sell. So that's a price rating about $4.80. And they cited increased competition as well as disappointing development pipeline.
So, did we actually finish the week? What was the performance for the ASX for the week?
Down half.
Down 0.5%. You would not know it looking at that sector performance. That sort of leads me to believe that it really is a stock picker's market, and growth, we can find growth if we're in the correct sectors. Would that be?
Just a bit of perspective. Caroline mentioned A2 Milk, and yes, it is a deathly chart, heavily downtrending. But to give you an idea, since the 19th of May, which is just almost 2 months now.
Yeah.
It's gone up 40%. That stock.
Same as Appen. Appen's up 19% since about the same time
Exactly
frame.
right. So yes, they're heavily beaten down, but yes, they have bounded back very strongly, and they're uptrending if you look at it in the last on a 2 month say chart. So
let's just say that if you're a financial advisor, a planner, or a stockbroker, or anything along those lines, if you picked them at the start of the year, you'd look like an idiot right now. But if you'd picked them 2 months ago, you would look like a real genius because they have done exceptionally well, leading me to conclude that timing in the market is everything, and I think we would all agree. Yes?
Yes,
absolutely.
Sure.
Very, very good. Ladies and gentlemen, we have had a viewer question email in, and we're going to go to that right now.
Hey guys, there are forecasts for oil prices to reach $100 per barrel. Do you think that oil stocks will exhibit similar upside potential?
There we have it. So, question on oil. Thank you very much. Well, listen, oil stocks and oil, so do we think there's potential upside now? And I would be inclined, I'll throw my 2 cents into the ring, I would actually be inclined to say that there's probably more upside in oil stocks than there is in oil. But what do you guys think? Mr. Mossman?
Yeah, that's the thing. There is upside in oil stocks, but whether a $100 barrel of oil will be reflected in the charts of, say, the Woodsides, the Beach, the oil searches, I wouldn't think so. We haven't seen that correlation over the last 4 or 5 months. Oil prices have been rallying to highs that we haven't seen in a very long time, almost approaching a price we haven't seen for 3 or 4 or 5 years.
Yeah.
And these beaten down oil players, they're still very low on their age, still beaten down.
I mean, if we take a Beach Energy, off the top of your head, what's Beach Energy's high for
290.
219?
990.
290, nearly $3. We'll call it $3 for ease. Yep. What's it's currently trading at right now?
$1-ish.
$1-ish, like
exactly
definitely,
right.
like, so it's safe to assume that oil is on a 5-year high. Beach Energy is on almost a 5-year low. It's a bit backwards. So by that definition,
So I think one thing to think about is you have to think longer term. I mean, so yes, oil is going up now, but do we really know we'll continue doing that for the next 5 years? And when you're looking at companies, maybe they are really projecting some concern. Like a lot of forecasts for oil, there are some that are the 100, and I also think short-term oil will continue upwards. But long-term, I would think that it might just slow down a little bit. That excitement for oil.
Yeah. So I think it's a bit of a mixed question on that one. That was such a good question. We've got some clever viewers that.
What I've been thinking is it's probably not a big conviction bet.
Yeah.
Those oil players, and in a company we've been covering and actually been very interested in over the last say 3 or 4 weeks is 7 Group Holdings. Now they have a 28% stake in Beach Energy, so they have that exposure there. So yes,
but they're also involved in construction and property management and
mean.
media as well.
Exactly
so they've just got a little bit of exposure. Because going into something like Beach Energy or even Oil Search is another favoured one. They are, those ones are purely oil players. So.
Exactly right. That's what I'm saying when I say 7 Group. You know, that exposure is definitely appropriate when they are beaten down, but it wouldn't be a big conviction bet of mine on these oil charts. There's something that is very hard to read as well, the oil players and their influence and what's moving the prices a bit convoluted. So I'd be staying away and be maybe looking at a bit more diversified bet. 7 Group is one that I do like right now and I've had for the last few weeks, for example.
I would actually go into add, and this will be the final point on it, I would actually go into add and say that oil has been rallying quite nicely, but Beach Energy and Oil Search haven't been doing very well at all. If oil starts to drop 5 or 6% in a day or 5 or 6% over a week, I think those stock prices are going to get absolutely decimated, and I think you've got more chance of it either leveling out or going down and having a bit of volatility than it going in a nice straight line towards the north. But that's just my opinion. Let's go to what else is doing really well. If you had, let's just say, 100,000 right now, and you had to put it into a sector, not a stock, a sector, which one would you go into? Caroline Wong.
Consumer discretionary.
So you're going to consumer. Okay, that's good. So we're talking. Which stock would you go into?
Sector.
No. I'm just saying.
Why consumer discretionary? Caroline, explain it.
Because it's the top performing sector last financial year.
Okay, so you think that momentum is...
We're talking things like Kogan, Breville Group, Coles, I suppose. No, else. It's Staples. Yep.
JB Hi-Fi's.
JB Hi-Fi's, Harvey Norman's. Okay, interesting. So you get... Okay, consumer discretionary. I like that. Okay, cool, brilliant. Dr. Adam, what do you think?
I would probably make a bet on the health sector, in fact.
healthcare sector, something that has not done very well, either pandemic or not pandemic. But
so that's really somehow some of the logic in my thesis there is because when you're looking at the performance of all of the sectors since the lowest of the pandemic, some of them have been up over 150%, like IT, whereas the health sector is at the very lowest. So I am thinking that, like, if I had to invest long term, I do believe that there will be a little bit of balancing out there.
Yeah. Well, I think it's pretty good that we've all got a different sector, because I'm going, in fact, financials and industrials as well. So we have seen a broad-based sell-off in the financial sector over this week, but I think the last few weeks as well. In particular, over the last 5 days, the Dow Jones Banking Index actually fell 5%. So we've seen this reflected almost across the world. And I think with the forward-looking expectations for both interest rates and as well the strength of the financial sector right now, there's a lot of the players there look very strong. And as I mentioned, the industrial space is just as well matched, okay? We've seen the performance of companies like Boral do extremely well, maybe not spread across the market as great as Boral, but I think there is, as in a stock picker's market, there are stocks to be picked there. So industrials and financials would be my two.
Well, I'll put my 2 cents in as well, and I'll sit there and say, I think tech. Now, I think tech, I mean, obviously, yes, the NASDAQ over in the US is continuing on its nice little rally towards the north, but I think some of our tech stocks are quite heavily beaten down right now, and I think I'd be in favor of something like an Appen Technology, okay, maybe even something like a Data 3, which is quite low in its range. So I would say the tech sector, I think, is certainly going to be a future, especially with what Caroline said about the bonds, that sort of cycle into potential growth. I do think that's something that could look quite attractive.
For sure.
But we've got a very, very nice sort of wide bit of news coming through there, a bit of opinions going on. That is very good to see. Ladies and gentlemen, we are going to take a quick break for now. But have you got a stock that you've been watching for a while? Is it time to buy, sell, or maybe average in? Why not send us a message and we can ask our panel. In the meantime, let's take a short break. Don't forget to like, subscribe, and hit that bell, and we'll be back with your final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, "Imagination has no age, and dreams are forever." KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back. The moment you've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. We know what oil, gold, and the dollar has done. We know what the top performers for the week were. Now let's find out what our panel is looking at for the week to come. And we're going to start off with Dr. Adam Shedakowski. What are you looking at this week, and why do you like it for the week to come?
Thank you for asking. So yeah, I'm looking at nickel miners, ticker code NIC. So this is perhaps a little more riskier than some of the others I have previously mentioned. However, I do think there is just a lot of potential. So let me just mention a couple of things. So macroeconomically, so when we look at production of nickel, there's just a lot of very positive sentiment. Another thing, there was just also some very recent news. So for example, the Philippine Nickel Industry Association, this week they make an announcement that they will be allowing more projects based on very positive optimism of what will be happening in nickel in the future. So they were putting some restrictions on how many projects can be open, and the momentum is somehow so positive, according to them, that now things have to change.
So Nickel Mines is a mine. They have a couple of mines here in Australia, and they actually mine and produce and excavate for nickel. Is that right?
Yeah. So precisely. So okay. So let me also look now more at some data. So financial in regards to earnings and revenue growth. So even though we don't have a lot of data on nickel miners, it is very promising, an uptrend. I mean, revenue is fantastic, and earnings are also positive and growing. Also, there has actually been some reporting on insider buys that we don't usually mention, but over this last year, they have been in the green.
Because this stock's trading at $1, about $1.06 or $1.07 at the moment, and it's been as high as $1.40 or $1.50 $1.50, which is a huge increase, and that was earlier on in the year. And they produce nickel pig iron.
Yeah, precisely.
That's the key ingredient in stainless steel, and there's some very much mistaken. So, hey, listen, a lot of stainless steel in the world, I have to say.
Absolutely, yeah. So it's really that. So there is just so much positive momentum for that sort of nickel as well. So also when we look at the broker calls, they are all positive. So Citigroup, most prominently Credit
Suisse.
Credit Suisse, sorry. So they have a 30% upwards target for that one.
So their price target is 30% higher than what it's trading at. So what's that? $1.30-ish?
Yeah, $1.40.
$1.40.
Yeah.
$1.40.
So
okay.
So and if you look at the so maybe also let's actually have a look at the technical. So let's look at the chart. So because exactly as you were saying, the potential for the growth is just phenomenal there. So I mean, so looking at so if you really want to pick up a beaten down stock, that so nickel miners will definitely be one of those. And so
certainly
the timing there is the timing is important really here. So when we look at the technicals, we see positives, stochastic, we see positive MACD. So the momentum is I think is right. So I think this could be the right time to pick it up.
So this is one that we've actually been in before. Okay, we've mentioned on the show before. And now it's come all that way back down again, from sort of 140 all the way back down again, formed that base level. And now you're of the opinion, you're on the anticipation that maybe it could be ready for another shoot towards the north, yes?
Yeah, there is like 47% upside to get to the previous.
It's a phenomenal story. Nickel Mines is a phenomenal story when you think about it logically. Yeah. It is a business which is relatively newly added to the ASX 300, hasn't been around for an awfully long length of time. Quite profitable, and over the past 2 years, it's had very stable increase in cash flow, revenues, and earnings. Yes?
Absolutely, yeah.
Perfect. So that's Nickel Mine. I really like that one. Let's go over to Miss Caroline Wong. What are you looking at, and why do you like it so much for the week to come?
So my opportunity this week is 7 Group Holdings Limited. This one has been brought to the table before. It's an ASX 200 company. It's a diversified group. It operates across various sectors. So for instance, it operates across the industrial sector through its exposure to Westrac as well as Coates Hire. It operates through the energy sector through its exposure to Beach Energy that Louis mentioned earlier, as well as 7 Group Holdings Energy, so that's SGH Energy. And of course, the media exposure, 40% ownership in 7 West Media. So macroeconomically speaking, I believe that the businesses that 7 Group operates, they are all beneficiaries of a reopening economy. So for instance, 7 West Media, it recently issued this trading update where they will be upgrading guidance because of a rebound in advertising revenues. So this is just one fine example of how 7 Group will benefit.
It had an announcement this week, didn't it? Shot up 4 or 5% in a day. Had a big sort of movement towards. It
sort of leads to my next point because its financials are so solid. Sales, cash flow, earnings have been increasing steadily for the past 4 years. It now is in a position to purchase 100% of Boral.
Yes.
So it previously it currently owns about 23% and moved up to 41% as of this week, but it's looking to acquire 100% of Boral.
So it's looking to own Boral, okay, exactly. And they're obviously in the construction space as well. Very, very interesting. I always think about 7 Group Holding as I suppose the kind of thing that if you're the type of person that likes to have a bit of diversity within the company, within your portfolio, you've got something that's in oil, reopening could do quite well. You've got something that's in media, reopening could do quite well. You've got construction, housing. They've also got a portfolio of housing properties they do. They do Coates Hire, which is absolutely massive. I was walking through the city, on my exercise, because that's what I was doing, because we're in lockdown. I was noticing a lot of the gates up and around the place have all got Coates Hire on them. And obviously they seal people off from going into places that you shouldn't be going. I think it's very interesting. What do the brokers say on it?
So it's a little bit of everything. That's why it's a very safe option. And this is also the reason why a lot of brokers like it. So Credit Suisse, Ord Minnett, UBS and Macquarie all gave it buy or outperform rating. But the most important thing is that all these 4 brokers, they all have an average upside of 27%. So that's close to 30%, a lot of upside potential. If you look at the charts, it's also very, very attractive. So it double bottomed at around $20 levels, which it used as support before bouncing higher. So you can see that the stochastic and MACD are both positively crossed with a set of open alligator teeth. So all these, if you bring it all together, these point towards potential positive momentum moving forward.
And it's interesting they said about broker calls, because what a lot of, I suppose, our viewers don't know is that we actually have a model that we use, okay, and that we put all metrics into, and that's what Dr. Adam Shedakowski does. He's actually works in our research department, actually doing the valuation models on all the businesses, so we know the right time to buy and sell, and we know about how to identify undervalued businesses. Now, Doctor, your valuation model reflects that it should be valued at about $24 something. Is that correct for 7 Group? It's currently trading at around the 21 mark. So your valuation model sees it to be slightly cheaper than what the other people are saying, a bit more conservative, potentially even a little bit more realistic, okay, but still quite a bit of upside. Is that correct?
That's correct, yeah.
I think that's such a powerful tool, and I think a lot of our clients love emailing in or calling into us and saying, listen, just run this through your metrics. Let me know what I should be buying for it, what it should be valued at.
Exactly right.
Absolutely. Well, listen, let's finish off with the ever mystic Mr. Louis Mossman. Have a chat to us about what you're looking at. Exactly. I'm sure it'll go up. What was the one that you picked last week?
Last week I think it was nickel mines as well.
Oh,
I believe.
Twice in a row. Well, that's definitely up.
Well.
It's
definitely done well this week, and it's again that was based on that whole nickel play. But I'm sticking in the resources space, and this one is a bit more mystic in regards to exactly what they do, because they focus on 15 elements of the periodic table. And don't ask me what all 15 are, but I can tell you what they do is rare earth minerals. The name of the company, Lynas Rare Earth Minerals. So they focus.
It used to be known as Lynas Corp, didn't it?
Lynas Corp.
Yeah, it used to be.
Business still the same. The ticker code is LYC.
Yep.
Now that company's involved in, as I mentioned, a range of different materials and minerals that are found in the ground. They're in abundance, but they're not found in massive deposits like we do see with iron ore, copper, and nickel. So what they do is they mine it all, and then they, of course, have to separate all of these elements that go into a range of equipment, electronics. I've got a list here, electronic, optical, magnetic, and catalytic applications.
Wow.
So a lot of our computer applications, a lot of our electronics, as it says there, have these very niche materials that are very much required, just as much as the stainless steel and the gold and the silver components. But again, they're just a little bit more niche. Now, the demand for these products is not going anywhere, and it's very well known for that. And Lynas is one of the biggest players in that space. They've got a market cap of roughly $5.6 billion. And another more encouraging sign is, as I mentioned, is the technical analysis. So if you bring up the chart, it has been downtrending since its most recent all-time highs. However, it has broken out very clearly out of that downtrend. Today, where the market, and this is the XKO, fell 0.9%, this company, and for what it does, it's a bit more speculative than, say, the index. It was actually up 0.66%. So, at a very strong day when the market was down. One more encouraging sign, and it's up, I think, almost 5% over the last 2 days. So, I believe it does have the propensity to either close the gap between its most recent high, which is around 10% away, or even definitely its all-time highs, which is upwards of 20 or 30% away. So, the Lynas Corporation, ticker code LYC.
Perfect. So we've got nickel mines, we have got 7 Group Holdings, and we have Lynas Corporations. Ladies and gentlemen, a lot of our clients here at KOSEC enjoy getting these emails. We actually, when we analyze these, we actually send them out to all of our subscribers in an email so they get first-hand. They get to see that before anyone else does. So if you are interested in that, please reach out to us here at KOSEC. We are done for the day. Thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend, and we look forward to seeing you next week. My name is Will Brownlee, and this has been the KOSEC Show.